Good morning or good afternoon. I see Brenda. We're going. I know you can see that I'm having some issues, and what you see on the screen is not the only issues. So it's no. We don't want the cat in here. That's one of the issues. Let me get the mic going. I still have this cough that's lingering, which is really irritating. Unfortunately, I'm doing what I can to keep it at bay. How's that? Can you see me now? Can you see me now? Can you hear me now? I heard gargling salt water. I'm just drinking it instead. I've got my Altoids, which I've discovered works pretty good. I've got my coffee. I've got my water. So we're good. Hopefully I can keep the cough at bay. Hopefully we can keep the cat at bay. She is, again, in heat. So if you hear this really loud, crazy growl from a cat, she's in that place right now. So yeah, I am. Thank you, Jennifer. I feel fine. It's this weird allergy thing that it's I can't remember what the doctor called it. I got tested a few months ago. They gave me these allergy pills. They don't really help. I took one a little bit ago, hoping that it would keep it at bay, but it just creates this little tickle in my throat and it creates a little cough. So yeah, not here. It hasn't. We got snow the other night. We got about an inch or two of snow. So it's sunny out right now, but it's cold. It was only like 18 degrees last night for us. So, which is not really normal here. So, but how's the market treating everybody? Yeah, it's supposed to warm up again though. So let me get the disclaimer out of the way. I am not a registered broker-dealer investment advisor. I will not give you any recommendations or advice. Everything we do here is purely for educational purposes. If I do happen to mention a trade, just assume it is a paper trade or a practice trade. For regulatory reasons, we do not discuss funded trading here. You see me now? So just a quick review of all the stuff that we're going to do in the next little bit. Trading You is the 27th. I think that's Tuesday, isn't it? Or is that Monday? Actually, I'm doing that. So if you're in Trading You, I'll be there. So we'll have some fun. Mastering and Trade is March 1st. Trade Watch Alert Q&A is March 2nd. And then Vegas Spread Mastery with Sean is Monday, Tuesday, and Fridays. And then, of course, mastermind groups are Tuesdays at 8. The free workshops, Power Hour, every Monday at noon. And Trading Coaches Playbook, what we're doing now. So thank you, Miguel. If you're not in Trading You, Miguel just put the link in there. So you can jump inside that if you'd like. And there she goes. I don't know if you can hear that or not, but it's really loud. Okay, you can. I figured that. Super, super loud. It just started yesterday. So, of course, timing is just right. It's like, what is going on here? Why does she have to do it right before I do this class? But if you have weekly whispers or patterns in a flash, you probably heard it too, because last night I was recording those and she was doing the same. Exactly, Bonnie. That's my next step. It was about a month or 6 weeks ago when she did this the first time. She just turned a year old on the 20th. So that's my next step. I know there's a place here locally there's several places that do it, but there's one place I heard was really good. So I'm going to take her in there and get her spayed, because she has sprayed a couple times. Thankfully, it's on some of my crappy furniture that I don't care about. So she hasn't got to anything good. She went on a pillow. So anyway, enough about the cat. But now you know why she's going crazy if you hear her in the background. She's not being abused. She's in heat. But Power Option Plays Tuesday, Saturday, Cover Call Explorer on Thursday. E-Mini Think Tank Monday, Wednesday, and Thursday with Brandon. So sound like a baby crying? Yeah, no more babies for me. Too old for that. I'm too old for the cat. But a lady gave her to me, and I haven't had an animal for a long time, so I figured it was good. So here's all the we're gonna have fun with that, but I'm also gonna work your minds over a little bit too. I forgot to say that. So we'll see. This may be some of you might not like me after we're done here, but it's not mine. Actually, I literally just stole something from who, I don't even know who did it, but we'll get there. So obviously you can follow us on all the social media platforms. So jump on those and keep us going. So Patterns in Flash, if you're not familiar with me, if this is the first time you've seen me or we've met, this is a tool I created that's all about technical analysis, learning to see the charts, recognize the patterns, how to trade the patterns. So Thanks, Miguel. There's Miguel just put a link in there for a trial. You get a 2-week trial. Weekly Whispers. This is something we just started doing, a month ago, 6 weeks ago. Basically 20 to 30 candidates every single week. It's basically the trades that I'm doing. I go once a week looking for trades. I find 20 to 30 candidates in my watch list. I plan the trades, and then that's all I watch for the week. And that's all I trade. I go look at them. And if we have enough time here today, we'll go, we might go look at a few of them if we can. So, but, oh, thank you, Miguel. There's also a link there for that if you want to do the trial to that too. Oh, thank you, Brenda. Good. I'll give you a free 2-week trial. Good. Thanks, Trip. I appreciate that. Trip says cool stuff with Whispers. So like I say, we will, we'll see if we get a few extra minutes here. We'll go play and we'll look at a few of those candidates that we had on the list this week. I just recorded last night. So if you have Weekly Whispers, you should be getting an email. If you haven't gotten it already, you should have it sometime in the next few hours. So interesting title, huh? What does that mean? Well, if you haven't noticed yet, if you haven't been trading more than about 2 days, then there are these things that we have hardwired into us that are just part of being human, right? They're called emotions. And they are good and bad, right? And that's essentially what they were designed for, right? Fear, God gave us fear for what reason? To keep us safe, right? I mean, if somebody kicks your front door in, it's pretty scary, right? And you're going to run and do what you can to protect yourself. Unfortunately, while that is the good side of fear, there are a lot of times where we succumb to fear in times when we shouldn't, and fear works against us. And what we're going to go through here is 38 steps to becoming a trader. And unfortunately, I just found this a while ago, and I read through it and I went, that is absolutely perfect. It really is. I just stumbled across it on some blog, and whoever posted it said that they copied it from somewhere else and they don't know who the original author is. So we can't give credit to whoever wrote this. I don't know who did it, but as far as I'm concerned, it is absolutely spot on. I'm coming up on my 23rd anniversary, and I'm like, yeah, nails it pretty much step for step. So here's what we do, right? The first thing we do is we accumulate information. We learn about the market. We learn about trading. We go get books. We go to seminars. We do some researching. And then we begin to trade with our new knowledge. All right. We're all excited, probably telling a bunch of people about it, telling your friends and family, hey, I'm doing this. It's awesome. You should do this. And you try to teach them a little bit, but you really don't know that much. Right? Anybody relate to that? I know number 3 you can all relate to. We consistently donate. And then realize we may need more knowledge or more information. So we go accumulate more information. Get more books, you go to more seminars, you do this, you do that. And then you might even switch. It says commodities, so I'm assuming this was a commodity trader that wrote this. Whether it's commodities or stocks or options or whatever instrument, okay, just replace the word commodities with instrument. I just left it intact. But you might switch in maybe stocks, right? You might switch from, say, IBM to, I don't know, Zimmer. Right, Trip? Actually, IBM worked good. It did. I don't know what it's doing right now, but so you try to change it up. Right? Yeah, this isn't working. Let's change this up. Then you go to step number 6. We go back into the market and trade with our new updated knowledge. I've got more. I'm going to do better now. And then we get beat up again. And then our confidence starts to wane. And that's when fear starts to kick in. And then you start to realize, right? I think I'm getting ahead of myself here. We start to listen then to outside news and other traders. And some of you have probably been there when I say don't necessarily, well, listen to other traders. But just because we've been doing it for a long time, like Rob and Brandon and Sean and Ryan and me, doesn't mean we're gods and we know what's going to happen. Your odds are the same as mine. It's 50-50 every single day. Just because we have more knowledge doesn't necessarily mean that the trade is going to work. Unfortunately, we bring that mindset into it. We think, oh, he's been doing it forever and he's does it. So he's going to be right. I'm not right that often. My accuracy rate this month is 36%. I think I'm at. Last month was 40%. I'm less than half. Last month I was profitable. This month so far, I'm not. But if this crazy market would stop going back up and it would tank, then this month will be spectacular. I'm underwater just a little bit right now. But you've got to be, you want to listen to people. Just don't take what they have to say as gospel. Okay. Understand that the market is going to do what it's going to do. And that's why you've probably all heard me say this. I hate the term expert. People call me an expert and I'm like, I don't like that, because experts get on TV all the time. They get on Facebook and they post, and Twitter and all these other places. They post all these things. Oh, this and this and this is going to happen. And then you know what happens when it goes the other way or it doesn't happen? They have egg on their face, right? Nah, they just delete it or pretend like they didn't say it. Or who really cares? When you get to the place, once we get to step 38, you'll be at a place, hopefully, when you get there, that you don't care what other people say. I mean, we listen to people. I listen to people all the time. But you've got to take the information and you got to use it for what you do, for your trade, right? So take in outside news. Take in what Rob and Brandon and Sean and I and Ryan tell you and teach you. But you've got to use it for your style of trading, right? Everybody trades a little differently. We all have different personalities, different risk profiles, right? So we step to 9, then you go back into the market and you continue to donate, right? And then you switch again. Well, this isn't working. This stock doesn't work. This strategy doesn't work. I need this technical analysis tool. I need this indicator or whatever it is. You're constantly changing it up. And I remember this. Okay. I started in April of 2000. I remember this whole process like it was yesterday. I mean, I can go through every single one of the steps and go, yep, I did that. Then you go searching for more information, right? Then you go back into the market and start to see a little bit of progress. Maybe I figured this out. And then you get overconfident. And what does the market do? Boom, slaps you upside the face. As soon as you start to think you figured it out, the market will humble you. That's why I'll never forget. I remember who it was. It was another coach I had years and years ago, talking about his kids. You know, he had little kids, and or I guess they were a little bit older, but he would always tell his kids, if you'll discipline yourself, I won't have to. And I've changed that for the market is if you will humble yourself, the market won't have to. Right? So when you get to that place and you recognize that you're starting to think you figured it out, bring yourself back to reality. You haven't. Okay. It just isn't there. Number 14 is you start to understand that trading successfully is going to take more time and knowledge and work and practice than you anticipated. And you notice I highlighted that next spot, which is part of that, is most people give up at this point. They realize that there's a lot of work involved. It's not a get rich quick thing. It's not something you step into and in 3 months or 6 months, you make millions of dollars and you're all of a sudden rich. It's not Powerball or Mega Millions. But see, that's what most people come into the market looking for, because that's what most people want. There's a reason that those things have been having $1 billion, 500 million, $1 billion. Some guy here in Washington won the 754 million, whatever it was. There's a reason people buy those things. And I buy tickets only if it gets over 500 million, because I mean, who can live on less than that, right? I mean, if it's 20 million, I can't get by on that. It's crazy to hear people say that. I don't play unless it gets over 100 million. Yeah, like 40 million wouldn't be enough. But most people come and even we're all looking for that quick thing, right? And that's what I wanted. I wanted to be there quickly. I wasn't necessarily looking for overnight, and I knew it would take some work. But we all want to get rich quick. And we come to the market and we see it as the opportunity because we hear stories of people that have done it. And so we think we're going to be that next big story. And the reality is that's just not realistic. I mean, sometimes it happens. If you know what happens, I'll never forget. There was a gentleman in 2006, 2007. Maybe it was 01. I don't remember. It's a long time ago. he came back to one of the workshops that we were doing. And he asked if there was a way if he could get into the technical analysis workshop at a discounted rate. Cause I think it was 2001, because it was like $4,000. It was $4,000 to go to a 2-day workshop on technical analysis. This is back in the old days before the internet was what it is today, where we can do this. And, there's all kinds of free information out there, and it's inexpensive and it's easier for us to be coaches. We can do it online, right? In the old days, you had to put on a live workshop, which meant a hotel room and all this other. It was heavy expense. So it cost a lot. He told me what happened. He started trading in late 99. He had $2,000 and he went to a workshop and everybody was all excited about Qualcomm. And he looked at it, he said, well, I only have $2,000. So I'm going to go buy these options on Qualcomm because that's what everybody else is doing. Or at least that's what they're teaching me to buy options. So I'm going to buy this one because that's what I can afford. He went way out of the money. He bought short-term, like 2 or 3 months worth of time, way out of the money on Qualcomm. I want to say it was at like 150 or 200 at the time. And he was like 50 or 100 points out of the money. He put the entire $2,000 into that one trade. Guess what happened to Qualcomm? 3 or 4, I think it was 2 weeks actually. It rocketed to 800. His little $2,000 account was now well over $500,000 in just a few weeks. He went from brand new rookie sitting in a workshop, not having any idea what he was doing, had $2,000, and now he's got over $500,000. And he just kept doing the exact same thing, just like everybody else in 97, 98, 99. Buy the dip, buy the dip. They're buying options, it goes up. They just hold it and it goes up. Buy it, goes up. He turned that $2,000 in, I think he said it was 14 or 16 months, into about 1.2 or 1.3 million. Yeah, grand slam was an understatement. That's like the grand slam in the bottom of the ninth of the game 7 and you're down by 4 or down by 3. But the thing is, see, it came easy. And he was back there asking, he was trying to get into the workshop for free. Why? Because he didn't bother to expand his knowledge. He didn't bother to continue to learn because he thought it was easy money. Hey, I'm getting rich. He even told me, he said, I quit my job. Wine and dined my wife. We flew up to New York first class. We went to a bunch of Broadway shows. We traveled. We stayed in first class hotels. We were living the life. Paid off his house, built a car with his son from the ground up. He told me the car was for sale right now, and he was trying to scrounge up enough money to save his house. He gave all his money back to the market, and he didn't bother to save enough for Uncle Sam. So let that be a lesson, that make sure that you learn how to trade properly, because he didn't. He just thought it was easy and thought it was going to keep going forever. And a lot of people make that mistake. But one thing that's important, and this is one reason I say this is a tough business. It's not easy. But if you just keep going and you slog through it, that's the only way, in my opinion, you fail, is if you quit. You throw in the towel, you'll never get there. But keep working at it. That's the hard part, is continuing to go through it. So step number 15, we get serious to start concentrating on learning real methodology, right? So if you get past that point where you don't quit, then you start to go, okay, now you take a serious turn and say, okay, I'm going to look for real solutions, because what I've been doing hasn't been working, right? So you trade your methodology and you have some success, but you realize that you're still missing something, right? So you started to get together kind of a plan that fits your style of trading, and you're starting to meld stuff together, right? You start to understand. You need rules to apply to your methodology. Maybe you take a sabbatical from trading. You develop your rules, you do a little more research and try to figure out how to create rules that work for you. Then you start trading again. This time with rules, though. You have some success, but you're still hesitant, right? Your confidence isn't quite there yet. So you add, subtract, modify the rules. Basically try to make your rules better. And then you feel like you're getting close. You're right at that threshold of breaking out, right? I think number 22 is important. And this is one thing that I covered in the mindset section of Weekly Whispers. is so many people come to trading, and I see it all the time, I still do, that try to blame somebody else when things go wrong. When you start to take responsibility for your own results, then you start to understand that success is in us. It's inside of you, not the methodology. It's not out here in the world. It's nowhere out here. It's in here, and it's in here. That's where it lies. And that's one point I make is that, and I think driving is a good analogy, right? If you're out driving and you go through a four-way stop and you get T-boned, that's not your fault, but whose responsibility is it? It's yours. There's a big difference between fault and responsibility. The second you get in your car and you put that thing in drive, you know that there's a possibility that somebody else will make a mistake and run into you. And you have to take responsibility for that, even though it's not your fault. Because whose car is damaged? Maybe you're injured. Maybe you have to do rehab. That all affects you. Just like trading, right? Maybe you get into a trade and then unexpected news comes out. And you had calls and this news drops the stock like a rock. Nobody knew it was coming. It wasn't earnings. It wasn't something that was announced. It was just out of the blue, like FedEx last year, right? They warned and the stock dropped like 30% overnight. That's not your fault. You couldn't know that news was coming. It's inside information that wasn't public. But whose account took a hit? Yours did. You are responsible for that because you have to know every single time you pull the trigger on a trade. You know that somebody could run a stop sign and T-bone you. That's a possibility. And you have to guard against it. It's called defensive driving, right? You can't stop everything, but it certainly helps to drive defensively and avoid those types of things whenever possible. 23, you continue to trade and become more proficient with your methodology and your rules. Then you still have a tendency to violate your rules and your results are still kind of erratic, but you can tell you're getting close. You're almost there. You can just feel it. You can sense it and you can see it, right? Yeah, Brenda, it should be, I believe it's being, I think it's being streamed live on YouTube. So it should be up on YouTube. I don't know how long it takes them to get it all done and up there, but Brenda said, I hope this is being recorded because I need to listen to it a few times. I know when I saw this, I was like, this is perfect. I mean, it really is. It's good information and it's very accurate. And again, looking back, oh, thanks, Trip. I thought it used to be live stream, I think. So recorded, but not live stream. So, but I'm pretty sure they posted up on YouTube. So go to YouTube and look for Trading Coaches Playbook, or you just put my name in. I think it'll show up too. It usually shows a few things. So, beautiful. Where were we? Oh, number 26. We get back to our, okay, so we go back and research our rules, right? So now we're starting to focus on our rules. Notice we're starting to focus on ourselves and not the external things. We start to build confidence in our rules, and then we go back and start to trade with those rules. We're getting a little bit better, right? We're still hesitant to execute, right? Your confidence is still not quite there. But in 29, you now see the importance of following the rules after seeing the results of the trades that you don't follow the rules. I think everybody here can probably relate to that, right? It's like, oh man, I didn't stop out. It just cost me $2,000 instead of $500. And you realize then, you know what? I'm upside down $500. I'm going to take my $500 loss because last time I ate $2,000 and that was not fun. So let me just take 500 because overcoming $500, not a huge ordeal. Overcoming $2,000 might be, you know, all depends on what you're working with, but it's 4 times as much, right? It's easier to take a small loss and wait for a better opportunity than to wait for a trade to come back and then take a monster loss, right? Number 30, we begin to see that our lack of success is within us, right? A lack of discipline is following the rules because some kind of fear. And we begin to work on knowing ourselves better. Fear, going back to fear, right? We continue to trade the market, teach us more and more about ourselves. This is one thing, and probably 2010, 2012, I was having dinner with a motivational speaker. Doesn't understand trading. And somehow we got onto the topic. And she had said, oh, I gave, $5,000 to this guy to trade for me. He supposedly knew how to trade and he lost it all. I'm like, there you go. Lesson learned, right? And somewhere in that conversation, I said something about, I said, if you want to go on the greatest self-discovery journey ever, and start trading the markets, start putting your own money at risk. And she kind of cocked her head and furrowed her brow. She's like, really? I said, oh yeah. You want to start to see the fear that you succumb to? Start trading the markets. I mean, how many of you have ever done that, right? You get into something and you panic out of it. It goes down, it's almost to your stop. You're like, and you freak out and you get out. Or you panic into something, right? It's moving, get in. And then as soon as you click the trigger, it turns over. I think one thing that's probably helped me the most is, yeah, exactly. Excuse me. Is when you really, really start to look in the mirror and you start to recognize those feelings of panic, that's when you know that it's probably not a good idea to make a decision. And when you start to see that in yourself, what you start to do is shift gears. Okay, I need to be in a place where I don't ever get into a spot where I panic. I need to have everything set up in place ahead of time so that I'm not freaking out. And if you recognize you are in that panic spot, then don't make a decision. I mean, unless you have to. If you're in something that, holy cow. Sorry. Probably should have locked up in the room upstairs, but when you learn to recognize those feelings in yourself, you learn to realize that that's not a good time to make a decision. I know. I realized that this morning. I was hoping she wouldn't do this, but I'll be looking this afternoon, actually. So the key is to learning to recognize, understanding first that the market is driven by emotions. You hear a lot of people use this mantra that says that, oh, it's, earnings drives the market. Not really. News drives the market. No. Those are all external things. It's the emotional reaction to the news. It's the emotional reaction to earnings. It's emotional reactions that people have that creates the market movement. The market is made up of millions and millions of human beings that are emotional, you being one of them. And you make decisions based on those emotions. Like right now, I'm cranky that Zim didn't trigger my order. Now I'm waiting to see if it falls back. I don't know if I want it anymore. Anyway. When you realize that getting control of your emotions and being able to see them and recognize them and not succumbing to them is one of the most important things that will allow you to stay in a calm, cool, collected place and make a good decision on a consistent, regular basis, that's when you start to get to that arrival point. Number 32, we master our methodology and our trading rules. So you've got a specific way you trade. You've got your rules in place. You recognize your emotions, and boom, then you begin to consistently make money. And then you get a little overconfident. And once again, the market humbles you because you didn't humble yourself. I've been there many times. I've repeated 34 probably 3 dozen times. It's like, I got this figured out. Yeah. And then whack. No, you don't. Then you continue to learn your lessons. And then eventually you get to a point where you stop second guessing things. You stop thinking about it and you realize that you've got a good, solid set of rules and a methodology that is working. And that's when it becomes boring. And that's sadly, I mean, it's not sad, but that's where I'm at now. I've gotten to that place and I've been there for, 3, 4, 5 years now, where it's not exciting. It used to seem really exciting, but now it's just like, oh, okay. I go look for a pattern. I go through my list of things. I find patterns. I narrow it down to 20 or 30 patterns. Okay, there's this pattern. I draw the lines. Here's my stop. Here's my target. Punch it in the calculator. Here's my entry point. Done. Now I just sit. I'm just sitting watching today. To pull the trigger on a couple of trades, trying to get in this other one. And then you just let things do what they do. 37 and 38 is where you want to be. It's where you make more money than you ever dreamed you could or would. Then you go on and do all the things that you wanted to. That idea, that vision you have in your mind, and I think one of the most critical things, I don't know how many of you are brand new to the market. Maybe this is your first time ever looking at it. Maybe you've been trading for a while. Maybe you've been trading for 20 years. You have this vision in your mind, an idea in your head of what your life looks like when you get to number 37 and number 38. And going all the way back to number 14, where most people quit, that's the time that you want to take that picture, that vision you have in your head of what your life looks like when you get to this stage right here. And you got to crank that up. You got to keep it on the forefront of your mind. Okay, this is what my life's going to be like when I arrive, when I get there. I'm going to have this, I'm going to have this, whatever it is. Some people want material things. Some people just want the freedom. Some people just want to be able to travel, whatever the case is, whatever it is that you want. You just got to keep that vision fresh in your mind. Yeah, I'll go back through really quick. You guys want, where did it go? There we go. Yeah, it's supposed to go each one, but yeah, if you guys want to take your phone, I can do this, give you about 20 or 30 seconds on each one. If you want to take a snapshot, there is, oh, awesome. You know what? I would say do that. Or if you want to take a picture with your phone, that's fine. Take one of there. I will actually also, I have a Word document with all these steps on here, and I will get it to the tech team. If you have Patterns of Flash, I can have them put it in Patterns of Flash and Weekly Whispers in the bonus section. I'll have them put it up there. So if you have Patterns of Flash or if you have Weekly Whispers, I'll have them put either a Word document or PDF up there so you can download it and then you'll have all the steps. But if you want to take snapshots with your phone real quick, but Miguel also put a link in there. Oh, it's at Wealth Builders TV. There's a recording there at Wealth Builders TV. And I don't know if you can, Bonnie. You can try. I don't know if that works or not. You could probably just go Google it too. I would imagine. I mean, it was on some blog that I found. It might even have the guy that wrote it originally. I don't know. There's 14. Somebody asked for 14 again. It's basically where it's the point where you realize it's more work than you thought it was going to be, right? People come into the market, and I did the same thing, and you think that you're going to make a fortune really quick, and it's going to be easy. It's not going to be difficult. It's not going to be challenging. You're not going to have any, it's not difficult. Wrong, right? I mean, it's like just about anything in life, right? Anything that's worthwhile is difficult. There's going to be massive challenges along the way. Yep. Let's go next one. I'll do this for a couple of minutes. If you're taking pictures of it. If not, we'll find a way. Like I say, we'll find a way to get it to you. I'll get it in Patterns of Flash and Weekly Whispers. So, oh, there you go. Tripp's got it. Oh, it's on Reddit. Yeah, I'd be curious to know who the author is. Still, I haven't seen that. I didn't search for it that heavily, but it doesn't matter. I think it's a beautiful layout of what reality is, because it really is. I mean, it nails every single point. Going back in my mind 23 years and going through every single one of these stages, it's kind of what we do. So if you want to speed it up, now that you're aware of it, right? Now that you're aware, if you're not aware and you're new here to trading, and you didn't realize that trading was going to be hard and a lot of work, and you're going to have good days and bad days, you're going to have good weeks and bad weeks, good years, bad years. It's kind of like marriage, right? You've heard, if you've been married for a long time, it probably wasn't easy, was it? Unfortunately, I find quitters. I found one that didn't realize how hard it was, thought it was going to be riding off under the sunset and marriage is going to be a piece of cake and everything's easy. There's no work at it. My parents have been married almost 54 years now. And I know, we've had conversations, especially as I've gotten to be an adult, that they put a lot of work and effort into their marriage. When I was younger, they almost got divorced apparently. So, but they both decided that it was worth it, which is the ultimate question. It's one thing that sticks in my mind. I'll never forget when we were having a conversation. I can't remember how it came up, but they were both there and they're like, we both just decided that it was worth it. It was worth fighting for. And it's really the same principle applies to trading. When you get to where you're going, it's well worth it. Whoops. Where am I at? Hurry up, Brenda. Wait, what happened? Hurry up. You got about 10 seconds. I don't know which one there is. But we can't sit here all day on these either. So, well, I mean, we could if you guys want to. I'd rather go play with some tarts, but enjoying my coffee. It's my last cup for the day. I've cut myself back to just 3 cups in a day. Most days. I might have to have a 4th one today. I was up later than expected last night. There's a second of the last slide, and then we'll have one more, and then we'll go over and play on the charts a little bit and see what we got going on. Starbucks is beautiful right now. Zim is a little frustrating, debating whether to leave it out there. What do y'all? If you guys are all watching something, if you want me to go analyze the chart for you, then start dropping the tickers in the chat box. Exactly, Jennifer. Jennifer says, yeah, I think these steps will work in other ideas. Says the real estate started a business. Yeah, I mean, they really are kind of rules for life. Actually, Jordan Peterson has a book, 12 Rules for Life. I keep saying I want to get it, but I've got so many other books that I'm trying to work through. And yeah, I mean, it really, you could apply this to just about anything in life. I mean, I use the example of marriage. I don't know why it just came up. It hit my mind. But I was having a conversation with my mom the other day, so that got a little deeper than I expected it to go. So, but yeah, I mean, if you're starting a business, same processes, right? I'll never forget my brother. You say real estate. My brother bought a house years ago, and he was going to flip it, right? As young, and we were in our 20s, I think, maybe early 30s. But he finds this house. It's a great deal. It's a fixer-upper. And he's got this idea in his mind. He's going to go in and, he's going to rehab this thing and he's going to flip it and make a ton of money. This was back in, what was it, 2000, 2001, 2002? Before flippers, at least, became, when social media gets big, now everybody knows what flippers are. But so he was a flipper before flipping was cool. But he worked his tail off for like 3 or 4 months. And he ended up selling this thing. And by the time he was done, he cleared like $9,000, which back then wasn't, it was a solid chunk of change, but I think he was expecting to make 20 or 30 or 40 or 50. And he expected it to be a heck of a lot easier than it was, because he was working 6-8 hours a day, every day as a job, and then working on the house. So it's, it was a lot more work than he realized. That was the last time he did that. So, which is a common experience for a lot of people. I've done that with a few things too. I've done certain things. It's like, oh, good. Up almost $6,000 today. So, all right. Good. Appreciate you all gave me some good ones to look at. Boeing. That thing was getting hammered earlier today. And this is it still down that much? I know where was it? I had it on the list here. Yeah, there's the intraday chart. Whoops, where'd that go? Where did that thing go? What just happened here? That's weird. That's it right there. But where is it? That is super, super weird. Super, super weird. Because there it is. I wonder if I have to close that. What is going on here? Where did that thing disappear to? I don't know what just happened. That's a first. Oh, there is that it? There it is. Oh, it got sucked up to that other screen. Okay, I figured it was something weird like that. Excuse me. So there's Boeing, the intraday chart. You can see the let me move it over a little bit. So there's Omega charts is on the right hand side there, but here's the intraday. The top chart there's the 5-minute chart. So you can see it gap down big and it's just been slowly dropping. And there's the bottom chart there is a daily, which that's interesting. I thought that was streaming. I'm going to slide this back up here. This is streaming, but why? Oh, that's why. Something is goofy going on with it. I guess we'll have to restart Omega charts. There you go. How you like that nice blue screen? Now I got to hustle. You guys are dropping lots of tickers in there. I like it. Yeah, exactly. True. Fortunately, I have, well, I have this one giant one, which is really awesome. It's a 49-inch curve. It's huge. It's like, I mean, it's just ginormous, which is nice. At the same time, it's kind of, it does create some challenges too. So I was going to get a second one and put up top, but I couldn't find they're not light. So, and I decided I just got two and put them up here, which works out better anyway, because I can put the camera right here. Anyway, so let's get back to Boeing here. This thing's not updating though. That's what I was trying to figure out. Oh, there we go. Okay, there we go. It just took a second. And just so you know, so on Omega charts, if you have the streaming service, okay, it's streaming, but it is 15 minutes delayed. That's what's kind of goofy. So you see the time here is it shows 9:29. So that's where it's at. It's ticking. You can see it ticking, but it's actually basically 9:45. So there's a 15-minute delay to it. Good for a bear call spread. I wouldn't do it at this point. I mean, it could if it continues to fall. But usually when you get a gap like this, it gets filled. If I was looking at a bear call spread on Boeing, I would wait to see if it bounces back up. If it bounces back up to this 206 level, then I would, if you're a spread trader, if you like spreads, I would do a spread with a stop. Oh, come on. We'll put it out there so you can see the number. I'd put a stop right up, probably above the close of that day, right about there. Target doesn't necessarily matter that much if you're doing a spread. I'll put it maybe down here. The 3-to-1 isn't that critical on this. It's mainly the stop if you're doing spread trades. But yeah, with a big drop like this already, the odds are pretty decent that it's going to retrace some. It might just keep falling. I don't know if did news happen on Boeing? I don't see anything. Usually a little bubble of news happens. So I don't know what the deal is and why it got hammered so bad. But yeah, I would personally wait because the odds of retracement are higher than the odds of it continuing to fall. I mean, it's 50-50, but it's more common that we have a retracement. We fill that gap first. So this is where being patient comes in handy because I'm not very patient either. I've had to train myself to be patient when it comes to trading. And I look at this and you know what? Tomorrow, this thing could continue just to tank. And tomorrow you'd be like, oh, Tony's an idiot. He doesn't know what he's talking about. I should have done a bear call spread. But there's also a 50-50 chance that this thing runs back up to 206. And if you did say a $200 spread or a 204 spread, whatever the numbers are, then now all of a sudden you're underwater and you're like, and you're freaking out. So one thing that I've learned the hard way is that putting the odds on your side is critical. I'd rather be out of a trade waiting for it than to be in a trade upside down. I'd rather miss it. I'd rather have this thing tank all the way to 150 than to get into it and have a bounce up to 206 or 208 or 205 and be upside down on spread, especially on a spread, because if it moves big against you, you're eating the whole spread most likely, unless you know how to get out of it easily and quickly, right? Oh, suspension on a 787 Dreamliner. Okay, that'll do it. So Yeah. So the big question then is the move an overreaction? Or is that big enough news to keep it dropping? I appreciate that, Charles. Thank you. Because there's the next question, Jennifer. If the news seems big enough that it's going to that the stock will continue, then that might be a justification for doing a bear call spread here. But if the news might be overdone, if the move might be overdone based on the news, which you don't know, there's no way to know that, right? It's just a guess. You're like, okay, I think a 5% drop on the suspension of the 787 Dreamliner is maybe overdone. If you think it's overdone, then it's probably going to rebound some. If you think that that's a big enough deal to have a dramatic effect on Boeing, then it might keep dropping. That's a decision, obviously, you have to make, right? So, all right, Brandon, we'll look very quickly at the cues. This should be all. Yeah, that's off. Oops, that's not what I wanted. I wanted to delete that. Probably could get rid of a lot of this stuff, but yeah, this is where, and I talked about this on the Weekly Whispers on the recording last night. So those of you that have that, or if you get the trial for it, you'll see that is that the NASDAQ, we had this support level right there. Well, I mean, this is the cues, right? So it's the same as the NASDAQ. I'll talk about it the same way. We have that 290, what is it, 291, 292 level, 292, 293 that we tapped. We had a little tweezer bottom yesterday, little hammer pattern, was looking good if PCE was decent, but it wasn't. And we've not only gapped, we gapped below it. And if that volume is accurate, then we have a high volume day coming, because we're only 3 hours into the market. I guess we're about halfway through. Not quite halfway through, but we're almost to the average volume already, being halfway through. So this is a big sell-off day. This is definitely an indication that, I mean, especially if we stay below that line. And if it continues to fall and it drops a bunch below that line, if it closes down in here, then that's definitely a very bearish signal. Now, would I be buying puts on it right now? No, it's dropped too far. Right? I mean, usually when you have a big drop like this, it retraces some. It doesn't, I mean, sometimes they fall like this. But you can see here, right? We get a big drop and then retrace for 4 or 5 days. Big drop, retracement. Big drop, retracement. So drops like this, while they can keep going, there's typically some kind of stall out, especially if it's around a support level like it is here. Well, what was resistance? So this is another place where I've learned to be patient. And if you don't have any patience, or if you truly believe that it's going to just keep tanking, and this is where, getting back to the subject we're talking about is the fear thing. There's two sets of fear, right? People call it fear and greed. I think it's all fear, right? You're afraid that if you get in now, it might bounce and you lose. But you flip that coin over, and the other fear is that it continues to tank and you lose a good opportunity. That's the greed. That's what some people call greed. You're getting greedy. It's already moved, and I think it's fear. It's FOMO, right? Fear of missing out. It's all fear. Greed is nothing more than fear. If you think that this thing's going to continue to fall, but you're afraid of a retracement, which is where I'm at, that's where my mind's at. I'm looking at this going, the odds are this thing's either going to stall out for a little bit, maybe it sits and dances for a few days, going sideways, or it's going to bounce and have a little upward retracement. That's where my fear is at. So if I was going to get into this to the downside, which I might consider, I would take a significantly smaller position. In other words, gauge your position size and how much risk you're willing to take based on the fear factor that you're feeling. You could do the same thing with Boeing. I mean, Jennifer brought up Boeing and say, hey, if you think it's going to keep tanking and you want to do a bear call spread on it, and maybe you normally would do 10 contracts, you say, you know what, I think it's a good position, but I'm not that confident in it. Just do 2 or 1. Who cares, right? I mean, you should be gauging the size of position and the amount of risk you take on not only the analysis of the chart, but the analysis of your emotions and where you're at. Where's your fear factor? Make sense? I think that's one of the critical things, because you want to be in a place when you make a decision that you have confidence. And if it does go against you, it doesn't create so much pain then it destroys your confidence. It's another important thing, and I've said this many times, some of you maybe you've heard it, is it's important to use stops, because when you don't stop out and it gets worse and worse and worse, and then you find yourself in that position, it's like, oh my gosh, is expiration here yet? Can we just get this over with so it can disappear out of my account? If you've ever been in that position, you know what I'm talking about. I've been there more than I like to admit. You start to log those memories away and you go, you know what? I don't want to be in that position again. And so you adapt your plan and you force yourself to make better decisions, which comes with managing your emotions better, learning to control that fear factor, and adapting the size that you take to that fear factor, so that if it does go against you, and God forbid something like that happens, because sometimes it happens, you don't have control over, right? If news comes out like Boeing, if you bought calls on Boeing yesterday, you're probably cranky today. If you did a bull put spread yesterday on Boeing, today you're not feeling good. Well, if you only did 2 contracts because your confidence level was, you had a fear factor, then you're probably not hurting that bad, right? I mean, I hope that should make sense, right? So there's the cues. Was the other spiders, right? Oops, that's square. Fat thumbs. That's pi. I don't even know what that is. It's just keyboard. I like the keyboard on the other computer. I've been tempted to switch it, but now I'm kind of used to this here. I just have to, actually it's good because it forces me to slow down. Oh, cool. Okay, I saw that. I'll do that. So, yeah, we got this beautiful downtrend. We had that head and shoulders, which is broken and is no longer valid, really. It's broken back below the neckline. Well, maybe it's not below the neckline, but it's back below the support level. So basically, it's pretty much the same as the cues. Not much different. You got a little hammer yesterday, not quite even tweezer bottoms, but we've dropped off. The question becomes how much, do we continue to tank from here, or do we have a retracement? That's 50-50 shot. Right now, it's kind of in the middle. I wouldn't do anything with it myself. I like to trade off of major levels, either a breakout of a level, whether it's a breakout to the upside or a breakdown, or if it gets to a certain level and starts to stall out. If it was sitting here, essentially we have this where we had that, 407 is that resistance level. We broke out of it, but it certainly looks like it was a false breakout now. So now if this thing rallies back up, but even 400 is kind of a big level that a lot of people are talking about. And it held it yesterday, right? It got just barely above 400. If it can't hold 400, it's probably coming down here to 376. The question is, how is it going to get there? Is it going to fall off a cliff? Or is it going to dance around here a little bit and then fall? And we don't know. The reality is you have to prepare for every situation. This is where scaling comes in handy. If you want to talk about fear factor and controlling your fear, let's say you think this thing's going to continue to fall, but you also think there might be a retracement. Maybe you pick up 1 or 2 or 3 contracts here. If it retraces up here to 400 or bounces back up into this area, now you can add to your position. If you're truly bearish and you think it's really coming down here, now you can add to it for less money and reduce your cost basis. And then if it turns over, then you make even more. But if it just bleeds without stopping, then at least you've got a little bit there, right? At least you're making a little bit. That's the way my mind works. And at least for me, from a trading perspective, it is very effective for me. It helps me control that fear factor. And Amazon was getting trashed this morning. It was, but then it bounced back a little bit. I had it up here on a real-time chart. But then I got rid of it because I was looking at Zim. Yeah, it got down and then tried to hold and then dropped off. But, oh, there it is. It's updated. Yeah, I wouldn't be surprised to see Amazon come back to these lows. I don't think the head and shoulders is no longer valid. Delete that, clean this up so my ADD doesn't make my head explode. I don't think there's much, not much to hold it from getting down there. Maybe right about there by 84. That's the next major level. Again, there comes the question is, we've already dropped quite a bit. How much risk do you take coming down here and where do you put your stop? These numbers are, where do you stop out here? Where's there a clear exit? That's always the big question for me is, okay, we've dropped off here. Where's the clear exit? I would prefer to see this thing come back up to the $100 level and then create a plan, put a stop right above 100. So I'm not a fan of getting in after it's already made a big move like that. CMG, who's that? Charles. Thank you, Charles. I haven't seen this one for a while, actually. Clean that up. Wow. Yeah, I haven't seen it for a while. 70. I don't remember what it was last time I saw it. It was like 600 or 700. So it's been a few years. Interesting. There's a weekly chart. And I always go back and look, if you're not familiar with my style, I always go back and look at the long term, and I try to find the major support levels, the ones that are really kind of driving the stock, if you will. There's the longer term trend. It looks like that's pretty solid. Yeah, the COVID crash had it go below it just for a minute, but this is not kind of on the fence about that, but yeah, that's pretty solid. There's almost 3 hits on it. Almost the head and shoulders, left shoulder, head, right shoulder. I mean, it's wonky. It's not real pretty, but it's kind of sort of there. Go back to a daily. Yeah, see, here's another one. I mean, you got 4 giant down days, and the odds of it continuing to tank are pretty slim. It could. You know, if you know more about this thing than I do and you think that it's going to drop all the way to 1364. But again, where's your exit? You know, that's the hard part, is how far back here do you put the stop? And that's a very subjective question, right? You could put it right at, you know, the high of today, if you really think it's going down here. So, but yeah, this is a tricky one. This is one that when it's in the middle like this, I usually just kind of like, I missed it. It is what it is. NVIDIA, what's that doing today? Up a bunch yesterday on news, but yeah, no surprise, it got back down. There we have an inverted head and shoulders that it looks like, I think this thing may, with the news, it may play out. Makes me wish I'd have jumped on it. Actually, I did play it right here, just this little tiny blip. But I wish I would have bought a 6-month option up here about, say, the 230s, 250s. But woulda, shoulda, coulda, right? So we'll see how this goes. I think if it stays above that level right there, this is what I like. You've got the old resistance here that it's broken out of. As long as that holds that level, now you've got a clean and clear stop right below that level. So you say, okay, that's where I'm getting out. If I get into this thing on a bullish move and it goes against me, there's my exit. And now you can take and we'll put it right up there at, where's the target at? 255. I think I have. Yeah, I have the calculator here. Come on, there we go. So what did we say the stop was at? 227.90. 255.60. So this is a 3-to-1 risk reward calculator, if you're not familiar with it. So we have almost 21 bucks of upside and 7 bucks of risk. If you haven't used this, use it. The odds if you're trading directionally, when it comes to odds, I mean, if you do 4 trades on this, you make 1 goes in your favor, 3 go against you. You lost $7 on 3, you lost $21. 1 trade goes in your favor, you made 21. You lost 21, you made 21. You're break even. What was your batting average though? You were only 1 for 4. You were right. You were right 1 out of 4 times and you broke even. That's 25%. You don't have to be right that often. So when I said earlier that my batting average in January was 40% and I was up 4.5% for the month, that's what I mean. You don't have to be right more than half the time to be profitable. But that would be my plan on NVIDIA right there. If it takes off to the upside, I'd get in about 234.82 with a stop at 227.90 and the target's 255. Kind of a tight range, but Darlo, I don't think it is. You know what? That wouldn't be bad to put in there, though. Let me ask and see if we can get that added to it. Because obviously, I mean, I do that. This is, you're in a weekly whispers. Obviously, you see all the trade, every single trade I have has a plan like this on there. All right, Trip, real quick. So there's NVIDIA. AMD, what's it doing today? We'll see. Probably down, yeah. This is the plan I had on AMD, but they gapped right through it for earnings. So this is not something you can really take advantage of. But I think if it rolls back down here into this area to that 74, 75 and stalls out, and then we get a bullish, any kind of bullishness, then I'd be looking for, placing a hook to the upside. Right now, I wouldn't do anything unless it comes back down into this area. IBM, I've been moved. A little hammer yesterday, but it's back down today. So this is had kind of a not really a wedge, but kind of a flag pattern. It's definitely not textbook or perfect, but it's a decent looking little flag. And I figured if it broke below there and it broke below this level, then it's probably come down here about 125. And you can see the trading plan I have on place there. So that's what I use on every single trade I do. Because just like the example of NVIDIA, right? You make 21 on one trade, you lose 7 on 3, you still break even. So all you got to do is be right, 30% of the time, and you're coming out ahead. Micron, we had a nice little, this has been crazy the last few days. I debated whether to get into this thing, and I was like, nah, I held off. And then it's days like today, you wish you would have been, but it's days like yesterday would have drove me nuts, right? If you get in here and then you're up, and probably would have pulled a little bit of profit on it, scaled out of some of it, but then yesterday it gaps up. It's like, you're freaking out, right? I'm not immune to it. I don't care how long you've been trading. The emotions are there. They always will be. Whenever you hear somebody say trade without emotion, run like the wind. It's not possible. That's like saying live without emotion. Don't get angry or upset or frustrated at anything at all, especially left lane campers. Don't you love those? Did I miss any? I think we covered all the tickers that you guys put in there, so it's good. Oh, Jennifer, I just saw yours. Oh, that was that was back in the marriage stage. I'm gonna cover questions real quick and then I'll call it a day. I just noticed we're a few minutes over. So what's my philosophy? To stick with something and work it out or not? Are we talking about trading or relationships? Actually, basically the same. It depends. Do you have a good relationship or not? I mean, do you have a good trade or not? I mean, if there's no hope of the relationship working out, yeah, implement your stop loss and get out. I've done that a couple of times. But then I have stuck with trades that were awful and I shouldn't have. I should have cut bait long before. So it's a judgment call and it's not easy. That's the challenging part of trading. It's, what if it does come back? What if she does change? Some people do, some people don't. Some trades do, some don't. So the best thing you can do is have a plan going in and stick to the plan, especially when it comes to trading. So, but there's the big thing right there. And I think the key is, obviously a relationship has two people. When you're trading, it's only a one person thing. It's you, but it's you and your mindset. It's you in your head. It's you and your fear. It's you and your emotions. And I think the key with human relationships is that you both have to be committed to the same end goal. And when it comes to an individual as a trader, if you're committed to the end goal of getting where you want to go, whatever that looks like, then you'll never quit. I had an idea, a vision in my mind of where I wanted to go. And I kept working at it. So, thank you, Trip. I was going to mention that. So Trip just said the 38 steps is pulled from The Way to Trade by John Piper, also published in Commodity Futures Trading Club News. So good. I'm going to make note of that. I want to give credit to where credit is due because it's awesome. So, and thank you for that suggestion, Darla. I'll double check and make sure and see if we can do that. So thank you, Karen. I appreciate that. Okay, I'm going to go back there real quick while I'm grabbing the rest of these questions. I think you need 6 to 10, Brenda. I think this should do it. There you go. I got it. Okay. I got it. If you're bad at getting out and willing to lose 50%, buy half as many options or shares. I like it. Good idea. Yeah, it took me a long time to figure that out, to adjust the size. And that's where the thing is if you, for those of you that are in Weekly Whispers, you hear me say this all the time, but sometimes patterns are not real pretty. They're not good. They're not great looking. But I've learned through experience that sometimes even the ugliest patterns will play out. And sometimes the ugliest patterns play out the best. So what I've learned is not necessarily to just kick it out and say, that's not good. It doesn't meet this criteria, doesn't meet that criteria. What I've learned is through the analysis process and say, okay, here's this and this and this. Here's the pieces of the puzzle that we need to make a good looking puzzle and to have a good trade. But if we're missing a couple pieces, that's okay. I will just reduce my risk. I will just not take as big a position. So I've learned that sometimes it's good to get in, even if it's just with 1 or 2 contracts, because it's better to have a little bit than to have nothing. It's better to sit there than be frustrated. But then there's also the other side of that coin, that it's better to be out. I mean, Boeing's a good example. If it bounces, it's better to be out on the sidelines and waiting than to get into it and have it bounce and be in an ugly trade, right? It all comes down to just putting the plan in place and sticking to the plan. And if you have a good, solid plan and your, what's the word I'm looking for? Methodology, whatever it is, if you have a good, solid plan and the odds are on your side, then in the end, you're going to come out ahead anyway. That's one reason 3-to-1 is so important. Is because I gave up, when I started using that, I gave up the idea that I had to be right more than half the time. And now I'm at a point where I don't even care if I'm right. That's one of the biggest things to let go of. You don't need to be right. Trading isn't about being right. Never has been, never will be. You don't have to have all the answers. You don't have to know everything. You don't have to be an expert analyst. You have to be able to see yourself honestly and not deceive yourself. I just remember seeing that a couple of years ago, and I'll close with this. It was just probably last week of the week. I was listening to an audiobook or something, and the guy said, we lie to ourselves 200 times a day or something like that. It was a crazy number, which is accurate, right? I mean, we tell ourselves things that, you're an idiot. I mean, I've done it. You get into a trade, it's like, gosh, that was stupid. I'm so dumb, right? You're not dumb. You just made a decision that wasn't wise. That doesn't make you dumb. The two don't connect, right? But we connect dots that don't belong. We connect things to ourselves that aren't really real. And so the biggest thing you got to do is guard against that. That's why I was saying earlier is if you have a stop, stick to it. I don't care how much money you lose. Because the psychological and emotional damage you do to yourself when you hang on to a bad trade and it gets worse and worse and worse and it expires worthless, that does significantly more damage to you in the long term, mentally, psychologically, and emotionally, than any amount of monetary number you can put on the loss. If you would have just taken the $500 loss instead of losing the $4,000 by watching it expire worthless, your head would be a lot straighter than it is now. We beat ourselves up and damage ourselves psychologically. We lie to ourselves. This is the most important part of trading. All right. Well, we just got filled. We'll see if that plays out. Certainly looks like it. Should we look at it real quick? This is this is a freebie for those of you that aren't in Weekly Whispers. I love the looks of this little ascending triangle. Okay, this is the list right here from Weekly Whispers this week that you should have. If you have it, you should have it in your email today. If you don't have it, go get the trial. Then you'll have these 30 stocks in here with trading plans. And here's Zimmer. It already triggered the entry point at 23.31. I had an order to add to some if it fell back a little bit. So hopefully this thing takes off. It's got earnings. That's not right. Its earnings is on the. See, I just lied to you guys. I didn't even lie to myself. I said I was going to close with that other comment, but now I didn't. So whoops, my apologies. 13th, before the market on the 13th. So it's a couple weeks, but with this momentum we have, I think there's a decent chance of this thing running at 25.72. And who knows, it might just bolt right through it. I hope it does, but we'll see. Oh, Karen, I just saw you consider a gap filled if the wicks have filled? Yes, that is when a gap is technically filled, is when there's not an actual true gap. A true gap is when there's no contact between trading ranges, right? So if the shadow's here and the shadow's here and it's missing by a penny, then it's technically a true gap, which means it hasn't been filled. But with regard to how to implement that in trading, which I think is more of what you're asking, is like, do you wait for it to completely fill? That's obviously a subjective judgment call, and it's hard to tell sometimes. Is it going to completely fill every little penny, or is it not? So make a plan for either or. If it doesn't fill the gap, what are you going to do? If it does fill the gap, what are you going to do? Be ready for both scenarios. That's probably the best thing you can do, is be ready for whichever thing it does, and then execute based on that. So awesome. All right, I got to shut up. Now I'm way too far. Thanks, Miguel, for being patient. I went way too long today. Trying to cut it off early. I actually thought we'd be done early today. But anyway. All right. Appreciate y'all coming out, having some fun, and it's been fun. So we will see you all down the road. If you're not in Trade U, we'll see you then, or we'll see you in Weekly Whispers or Patterns of Flash or wherever you find us. So, all right, y'all have a wonderful day. Have a great weekend. Take care. God bless. Goodbye, y'all.